Hi, I'm Troy Evans, and today we're going to be talking about how to use your retirement savings in order to invest in business opportunities. And as always, this video is primarily for my daughter Bella and my sons Kingston and Cairo because I would want them to use this strategy when they get older, assuming the rules of the IRS don't change. But in the meantime, you can utilize this strategy to earn a greater investment and enjoy a more financially free retirement. So today we're going to be talking about how to use a self-directed IRA or self-directed individual retirement account and how you can use this tool to generate greater returns and invest in some business opportunities that you may come across while searching for alternatives to your current 401k or IRA. Before we dive in, this is not legal advice or financial advice. I am not an attorney or an accountant or a tax advisor. So this video is for educational purposes and you should always seek the advice of a professional. So a little bit of information about myself. I've been a real estate investor for more than 10 years. I currently run an investment fund and I've got over 25 years of business acumen. And this topic in particular is of interest to me because I know several individuals who have reached their golden years of retirement and quite frankly, they're just not prepared financially for the amount of years they have left. And this is a tool that can perhaps address it for you and your loved ones. So first, what is a self-directed IRA? Well, just like a traditional IRA, it's a type of individual retirement account. Except with a self-directed IRA, you have more control and flexibility over what you choose to invest in. When you have a traditional IRA or 401k, you normally have a fund manager that is making all of those investment decisions for you on what you can and cannot invest in. But with a self-directed IRA, you are in control and you can choose alternative assets. It's still governed by the rules of the IRS, and you do need a third party to set it up for you and administer the distributions and make the investments. So what are some examples of alternative assets that you can invest in via a self-directed IRA that you can't invest in a traditional IRA or 401k account? Real estate is the primary one. More than 80% of the people that I come across use the self-directed IRA to invest in real estate, and that's what we do here at LRVP. But you can also do private lending, or you can participate in a private placement. You can invest in foreign currencies. You can also invest in startups. And a big one now is cryptocurrency. So it gives you a lot more flexibility than you're used to in your retirement options. So why haven't you heard of a self-directed IRA? And that is a great question because there's more than $27 trillion invested in retirement accounts, but only 4% of people actually take advantage of self-directed IRAs. So that's one of the reasons why you haven't heard of a self-directed IRA is not that many people are taking advantage of it. But I think there's another reason for it. And that is that the financial advisors that set up your 401k and your IRA, they don't get a financial benefit from steering you towards controlling your own investments. They are in control when you do a traditional IRA or 401k, and therefore they get the commission. When you do a self-directed IRA, there's no financial incentive for them, and therefore they tend to steer you away from this option. So some of the key takeaways I want you to have when thinking about a self-directed IRA is that any current IRA plan or former employer plan can be used to start a self-directed IRA. The second is that you are in control of the investments. You have to do the due diligence. You have to make sure that it's actually a wise investment for you, and you're not going to be able to get advice from the custodian and they're not going to give it even if you ask. So you have to make sure that it's actually a good investment for you because the benefits, the gains, and the losses are all on you. Lastly, all of the expenses and income related to any investment you make must flow in and out of the self-directed IRA account. So if you use money from that self-directed IRA account to invest in a business opportunity, the profits and or losses that you receive from that opportunity must go back into the self-directed IRA. You cannot directly take it out until you hit retirement age. And you're not just limited to a traditional IRA if you want to turn it into a self-directed IRA. You can use a Roth IRA, a SEP IRA. You can also use your health savings account or your education savings account. So there's a lot of flexibility in what you can use to turn into a self-directed IRA. So why would you want to self-direct? And that's a great question. For many people, it's a source of new capital. If you are looking at a business opportunity or an investment that you like to make, and maybe you don't have cash on hand, but you do have money in a traditional retirement account, it may be time to self-direct. There's also the possibility for greater returns, and I think this is one of the most important factors in choosing to self-direct. If you are invested in a traditional IRA or 401k account for your retirement savings, you're likely earning what the mutual funds and S&P 500 is doing currently, which traditionally is going to be somewhere between 3 and 7%. While good, it's not great. And maybe you have the opportunity to earn returns of maybe 15 or 20 or 25%, and you want to take advantage of those opportunities, and you therefore want to utilize a self-directed IRA account. I think it goes without saying, but I'm going to say it anyway, there are tax benefits associated with a self-directed IRA. Just like your traditional 401k and traditional IRA, however you have your account set up, you're either going to receive tax-deferred benefits or tax-free benefits. So that's always a good way to grow your capital and plan for retirement. Additionally, many people aren't planning on using the funds in their retirement account for quite a while, and it may be a better use of their funds instead of waiting 20-25 years to tap into them. And also, very importantly, you are no longer outsourcing your financial security and financial future. While it may take a little bit more education or research, it's better to take control of your future instead of outsourcing it to someone else. So what are some of the rules and regulations in regards to a self-directed IRA? Well, there are numerous of them, so I would recommend going to the IRS website to get that information for yourself in detail. But for the purposes of this video, we'll go over a few. The first is what we like to call prohibited investments. Now, there's more than just these two, but basically life insurance and collectibles are two of the investments that you would not be able to make out of your self-directed IRA account. Additionally, there are such things as prohibited transactions. So a prohibited transaction is going to be any transaction between the plan and a disqualified person. And also the IRA owner or disqualified person receiving a benefit from the assets of the plan is also prohibited. So what's an example of disqualified persons? First and foremost, it's the owner of the IRA and their spouse. Additionally, it's any parents or grandparents or kids and grandkids of the owner of the IRA. One more example of that would be a business entity owned by one of the people above. So what does that look like in reality? In reality, that means that you can't, for instance, purchase a piece of property out of the IRA, the self-directed IRA, from your son or daughter. Or you couldn't rent a rental property that you had purchased using self-directed IRA funds to your daughter or your son or to your spouse or to your mother or father. You have to make sure you are utilizing what's called an arm's length transaction. So make sure you follow these rules and you shouldn't have any problem. Additionally, there may be an instance of taxes that comes into play with a self-directed IRA, and those are called the UBIT and UDFI taxes, or unrelated business income tax and unrelated debt financed income. And for the purposes of this video, we're going to simply be talking about the unrelated debt financed income because it relates to real estate. And it only applies if you're using leverage, meaning taking out a loan in order to buy a piece of property. So as mentioned earlier, you should always talk with a financial professional. You should always talk with an accountant and just make sure that you are steering clear of any tax issues. And if you do have to pay any taxes, that's fine. You'll just fill out a Form 990T to stay compliant. So let's use an actual case study example to talk about how you and others can benefit from a self-directed IRA. So in this example, we're going to actually use a real estate syndication because that's the business that I'm in. However, remember, you can use self-directed IRA for many different alternative assets, so you'll just have to do your own research. In this particular example, we're going to have an individual, we'll call him Robert, and he has about $100,000 in a traditional IRA or in a former employer plan. And he decides that he wants to do some real estate investing and moves his $100,000 into a self-directed IRA. Now, after doing some research, he comes across a real estate syndication group that they want to invest in acquiring short-term rental properties. And Robert decides to review their material, their prospectus or subscription agreement or what other information they might have, and does his own due diligence, because remember, he's not going to be able to get advice from a custodian of the account, but he could talk to his own financial advisor and what have you. And he's going to decide if the opportunity is actually a good one for him to invest in. And in this case, it was, so he moves forward. So the custodian of the self-directed IRA will then work to complete the necessary investment documents. And they will make sure that it's all completed correctly, and they will actually issue the distribution to the syndication on Robert's behalf. And they'll set up an account that says IRA for the benefit of Robert Smith, account number, so and so and so and so. And that way you'll make sure everything is IRS compliant. After several years of his money being invested in the syndication, his IRA has been receiving quarterly dividends that average about $22,000 a year. And then after 4 years, the IRA receives a lump sum payment of $220,000 because the syndication decided to sell all the assets and close out the investment. And so that means that Robert's IRA has earned about $88,000 in annual distributions and another $120,000 in profit from the sale of the assets, which means his total profit on this particular investment was $208,000. And this is what's key. You have to determine if the way your funds and retirement savings accounts are being invested right now are going to yield you this type of return. If they are, then I would keep them there. But if they're not, and you want to take advantage of some other investment opportunities, then a self-directed IRA is for you. Consult with the necessary professionals, but I think that this should at least be one of the tools in people's arsenals when they're thinking about their financial future and retirement. Hopefully this video was valuable to you. I know that it was valuable to me when I learned about self-directed IRAs, and it is a part of my retirement strategy. And many of the people that invest with us at LRVP also invest out of a self-directed IRA. So hopefully this video has been valuable. That's why I wanted to create it. If it has been valuable, or if you have any questions, do me a favor, leave a comment below, subscribe to the channel, like the video. This will allow the channel to grow and bring you more great content like this. All right, take care, and I will see you in the next video.